Radar. So first, let's get in Nikunj's take. Let's discuss then the NBFCs and Reliance Industries. Begin by talking about RIL. We discussed it at the get-go as well, the kind of underperformance at a time when we're looking at life highs. It has a healthy weightage of 10% plus on the index. In the last 6 months has declined about 8%. What's driving this underperformance?
It's a stark underperformance. It's rare that when markets are making a comeback, when ETF flows are there, Reliance underperforms in such a stark manner. Why is Reliance underperforming? And I think markets, I guess, are overestimating the impact what will happen because of the slowdown in their old economy, stroke their chemical, petrochemical, as well as their entire, O2 business. I think it's fair to assume that the China demand is not there. It is fair to assume that GRMs are not that strong. It is fair to assume that the cash flow would be impacted, and when the going was good, the windfall gain in a sense was put. As a result, they were not really able to benefit out of the cycle. But I guess somewhere markets are overestimating the impact of global slowdown in the chemical business, and markets are underestimating the strength which now is there in the retail business and some of the other businesses. I think the retail business is firing full cylinder. Geo business has stabilized. The green hydro business, the capex cycle it's right on its way. They do not have a debt issue now. Cash flows are improving. So I think it's a matter of time someone would come and say, aha, how come Reliance is underperforming? See, it's an institutional dominated stock. So institutional activity only will have an impact on how the near-term direction for Reliance is going to move. But my limited point is that the underperformance in such a vibrant market is very stark, and it is a matter of time someone will recognize that somewhere this is an opportunity, not something which you can ignore for long.
Okay, so that's RIL for you, discussing the underperformance. Let's move on to NBFCs, and it's been anything but underperformance. Pretty decent year-to-date moves that you've seen across the board from some of these names. Valuations as well reasonable, and more importantly, Nikunj, the commentary has been strong.
I like this space. I think we've been talking about it, and I think there is still some more steam left. You can be specific in terms of what a Chola has to offer versus what a Poonawalla FinCorp has to offer in terms of the profiles. Look, NBFCs cannot be compared as one homogeneous basket where everything just goes up in a hurry. But in general, there's one thing which I've seen over the years which works for an NBFCs is that in a rising interest rate environment, they underperform. In a falling interest rate environment, they always tend to outperform. That's largely because NBFCs, they borrow from the wholesale market. When you're borrowing from the wholesale market, the cost of capital, which is the basic raw material, that direction really matters. Given that RBI has hit a pause, I think it's a pivot. Interest rates are not going to go higher. If interest rates are not going to go higher, bond yields have come down, the wholesale market liquidity will ensure that the cost of capital for NBFCs will remain strong. Then you have to get into specifics. Which one is in vehicle finance, where things are moving in terms of the rural play, where things are moving in terms of the car finance. That's a judgment call. But in general, I guess NBFCs could exactly do what banks did in last 1 year, in next 6 months. So if you're looking at an outperformance, it's going to be large corporate banks. It may not be small PSU banks, but it will certainly be a lot of NBFC names.
Okay, that's the view coming in. Stocks on the editor's radar. Aisha, perhaps we'll get in Deven's view as well on some of these.